Thanks so much, of course, to Integrated-Equities for putting on this event and for everybody here to join in and brush up on our investment skills. Our presentation is in regards to BC's multiplex plan and how and where you can capitalize on it. So just a little bit about us. Taylor did a great introduction. I'm Dan Wurtele. This is Ryan Dash, 7-year realtors here in GVRD. And yes, we do run a team of 6 in Vancouver called the Vancouver Life Real Estate Group. We're currently transacting in President's Club, which means we're in the top 1%. We outsell 99% of the realtors in Vancouver. But why that's important is when you deal with a high volume of clients, you get a real sort of boots on the ground, real-time understanding of what real estate consumers are looking for. What are their pain points? What's missing? What are the price points that are attractive these days? So that's super important for this presentation. He mentioned our podcast, the YouTube channel. Yeah, fantastic. We just released episode number 244 yesterday. New episodes are out every Saturday. When it comes to the multiplex plan, we are involved in 3 projects right now. We have 6plex on Vancouver's west side, 4 units in East Vancouver, and probably we're involved with 8, I think, right now in Burnaby.
All right, so guys, what is the multiplex, right? So Bill 44 is a provincial legislation that was put forward in the fall of last year with the intent of enabling more homes to be built quicker, requiring local governments, municipalities to update their zoning regulations to permit small-scale multi-unit housing options. It allows for effectively what was otherwise zoned as single-family residential lots. You can now build up to 6 dwellings on that single lot.
Yeah, we're going to do this the whole presentation. We cannot overstate how monumental this truly is. I mean, this is the single largest rezoning within our province that we will ever probably live through. And with such monumental change comes often monumental opportunities.
Yeah, so who benefits from these opportunities? Well, real estate investors like yourself who are looking for real estate investment with limited exposure. What I really, really like about these builds is they're typically a 2.5-year turnaround. So your money is not tied up for a long time. In fact, it's often de-risked by the timeline alone. There's also huge demand for this missing middle. It's something that Vancouver is plagued with. We have a lot of condos, we have single family homes, we've got duplexes, but we don't have that middle row home, that town home. We don't have enough of them that aren't in densified areas. Who else benefits? Existing builders and developers moving away from townhome and condo towers due to the permitting process, which can be very expensive, the rezoning costs as well, and those long timeframes. It can take 3 to 6 years to build a tower. Here you're looking at 2.5. Single family builders who are also looking to scale their business. One thing that we think is going to take place here is over time, single family homes are going to be unicorns, and the builders around them are likely going to have to evolve as well. So there's multiple best use cases for this asset. Depending on what kind of market you find yourself in, you can pre-sell these. You can also sell them once they're built. You're looking at long-term cash flow rental, or the option that we found with a lot of homeowners is their participation. They want to get together with an LP or with a GP and structure this build where they can sell part of it, rent part of it, and live in part of it.
So when the legislation was pushed through and everybody's property was zoned from single family to multifamily, everybody kind of thought they hit the land lottery. And that's not entirely the case. Realistically, there's only about a fraction of properties that have significant development potential that are going to have or be worthwhile for investor returns. Knowing exactly which cities, municipalities to target, and then of course which individual lots to target are part of what we're going to help identify today.
Okay, so what areas are pro multiplex? Well, there's varying degrees of adoption that's taken place, but primarily Vancouver and Burnaby are your 2 primary adopters of this policy. Surrey, Port Moody, and Pitt Meadows have also adopted the policy, but again, with varying degrees. Dan will go through this in a bit more.
So some municipalities have sort of said, yes, we'll adopt it, but to almost like a minimal degree. So much so that the building environment is still quite restrictive. We look at the district of North Vancouver, for example, they have only rezoned 14% of all single family lots in that area and only allow a 0.35 FSR. As a builder, you know that's not going to work on your pro forma. New West, only 3% of properties have been rezoned. Delta has rezoned, but again, 0.3 FSR plus 1,000 square feet of buildable. It's just not going to be very attractive. Richmond allows a 0.6 FSR up to 5,000 square feet and then 0.3 afterwards. So we are really not seeing our builder and developer clients moving into any of those jurisdictions just because, again, there are more favorable neighborhoods.
And for those of you who don't know FSR, that's a floor square ratio. So for example, in Vancouver, on a multiplex, you can get up to 1.0 FSR, which means if you've got a 6,000 square foot lot, you can build 6,000 square feet. So when you look at something like Richmond at 0.3 FSR, there's a lot of the lot that's not getting used. We've also had other jurisdictions that have just flat out pushed back. For example, Coquitlam has even deferred a decision until June of 2025. Same with Langley, West Vancouver, and the city of North Vancouver have all had huge pushback. So there was a promise from the provincial government that they were going to mandate this, but as you can currently see, there's adoption taking place and not happening as well.
So let's talk about the two cities that kind of are the most favorable. First one being Vancouver. While it has basically fully adopted it, there are still many limiting factors. One of the biggest ones is that the lot must have a laneway in order to qualify for multiplex. You could have a 20,000 square foot lot, no laneway, no multiplex. The developers and builders that we've partnered with now that are having shovels in the ground for multiplex, when it comes to the west side, they are typically targeting lots that are at least 50 feet of frontage and over 6,000 square feet. And the reason being, of course, is how much they can actually build to make the revenue numbers then work in their pro forma. When we move over to the east side, which is, of course, predominantly 33 by 120 lots, those basically don't work, and we're not seeing an absorption there. You want to see at least 44 feet of frontage and a lot size of at least 4,800 square feet on the east side to make these numbers start to work.
Yeah, there's been a lot of political noise about this transforming the entire landscape, and it's just not the case. When you actually put the pencil down, you realize there's just a handful of lots that'll work. So those handful of lots, when you're driving around or when you're speaking to people and you're talking about doing an investment, what do they look like? Well, you're looking for flat, square, or rectangular shaped lots. In fact, width is far better than length in this regard. You're looking for lots that have little to no environmental impact, right? So ideally no cleanups, no gas stations, that kind of thing. No restrictive covenants. So if there's a 50-year-old covenant or a 100-year-old covenant on this property, that will trump this policy. So your due diligence in this is very, very important. You're also looking for corner lots, ideally with old homes. And you're also looking for existing or oversized services that are already in place that you can tap into. Currently, we are seeing quite a bit of adoption in Vancouver. Last time we checked, there were 212 permit applications for multiplex at the city.
Okay, now let's talk about the holy grail of multiplex cities, and that is Burnaby. So Burnaby has unquestionably the highest level of adoption of this policy. And a major reason is the mayor had already been working on basically rezoning that city in advance of Bill 44. And so when it came along, they said, well, great, we're already 95% of the way there. We're going to adopt it. Here's the final small notes on it. One of the biggest game changers Burnaby has done, and make note of this, they have completely removed the requirement for a development permit. The cost and time savings there alone is immense as you go straight to your building permit in Burnaby for multiplex. Burnaby has no FSR limit, none at all, which sounds amazing. So you can literally build as big as you want, obviously within the city bylaws, right? In places like Vancouver, you're fighting and paying for that extra 0.3, whereas Burnaby says build as big as you want. They also allow for up to 4 stories on multiplex lots. All these lots are already zoned for 4 units, but for the lots that are within 400 meters of a frequent transit network, that being, of course, a bus stop where the bus stops every 15 minutes or less, that lot is now automatically zoned to build 6 units on it. Plus, Burnaby is quite liberal with their sort of massing arrangements, right? You can build townhomes, you can build row homes, duplex, fourplex, sixplex. They've really kind of opened up your configuration options, making it even more desirable to build in that area.
Okay, so we figured it would be poignant to walk you through what a typical example would look like and what those returns could potentially be. So Dan and I chose probably the most British corner in all of Burnaby on the corner of Chiselhampton and Rugby Street. You've got an 85-foot lot by 135, creating 11,545 square feet. It's a corner lot and within the FTN, so you're automatically able to go to 6 units. It is also flat, and this particular property sold this year for 2.55 million. What you'll also notice is that there's no lane. And that is important because this particular development would not be allowed in Vancouver, but instead in Burnaby, you can go for it.
So the massing study, what do you actually build on a lot? It is very important, right? You want to not only build to the highest potential for revenue, but you also want something that's desirable for the end user, right? You want a nice community. You want something that people ultimately are going to buy. So on this lot, you can kind of see what we've done here, which is quite unique in Burnaby. We put a drive aisle straight up the middle of this lot, 27 feet wide, and separated essentially 2 sets of row homes, 3 per side. And this has allowed us to maintain nice yard space on the front and back of this property. You've got 4 end units, 2 middle units, and a pretty nice flow, I think, to these. These would probably be desirable for this area. Ultimately, we got the 6 units, so we've maximized the allowable there. These homes are 2,000 square feet plus a double garage at 400 square feet. And this is over 3 levels. These are quite livable homes, right? The footprint is 25 feet by 39 feet. Okay, that's 975 square foot floor plate. Very livable, lots of configurations you can do within that, right? We've all seen townhomes at 14, 15, 16 feet wide. We're given 25 feet of width here. 50% lot coverage is the maximum allowable within Burnaby when you have 6 units. And you'll see here, this project ended up being a 1.25 FSR. What's interesting about having no limit with your FSRs, you can overbuild, right? We could put a 4th floor on here, but would that actually be desirable or would you be overbuilding? So we've gone to 1.25, but just think this same project in Vancouver, for example, where you can only go to 1.0 FSR. I mean, the extra 25% buildable is obviously 25% more revenue. And that's really been a game changer for Burnaby to make these numbers pencil.
And not to mention too, when you go to Vancouver and you're looking to achieve 1.0 FSR, you're going to have to pay the city for that as well. Whereas Burnaby says you can go for it. So when we look at our pro forma here, we want to figure out who are we up against, right? What is our market competitors look like? Well, the duplex neighborhood, we're looking at $975 a square foot on average in Burnaby. And townhomes, we're looking at $950 a square foot. And we believe, based on cost efficiencies and what we can generate in terms of revenue, that we can sell these all day at $900 a square foot at 1.8 million per. And it's my bet that we could probably do better, and we'll get into that.
Here's where I just stand side by side for this one because we're going to go back and share. Okay, so knowing our revenue per unit, we are building 6 units here. This gives you a total gross revenue, $10,740,000.
Then you've got those pesky realtors that you have to pay to sell them. So you have to discount your total revenue by 3%. So you're looking at 10.425 million to sell all 6 units.
Going into the cost side of this pro forma now, we've already got our fixed land cost, which is 2.55 million.
And then you've got hard costs of about, we have there $280 a foot. Now, we know in speaking to a lot of the builders that we're talking to, we can do better than this. But for the sake of creating a pro forma and being on the conservative side, we've got a cost estimate of $4 million here.
Soft costs for a project like this, which of course includes your city fees, your permit fees, your architect, and so forth, they average about $80 a square foot for a project like this. So 1.15 million has been written into the pro forma for this 6-unit development.
Depending on what you find underground and off-site, we might be looking at some servicing upgrades. Ideally, you want to stay away from any kind of road widening or things like that. That will push this number way higher. But if it is just increasing your water mains and things like that, you could assume 300,000 for off-sites.
Financing. So these projects tend to complete in about 2 years. And so at today's financing rate, about 8% here, your interest on this project comes in about 860,000.
So your wrap up of costs here is 8.875 million.
Yeah. Okay, so this does look to be profitable to the tune of about $1.5 million or a 14% profit.
And when we look at return on cost too, because we're going to look at a couple different ways, but return on cost is 17.5%.
Which gives you, sorry, this is a 75% loan to value project here. So your mortgage is, or sorry, the equity required to build this project is about 2.2 million. So, you know, there is a barrier to entry when we're talking about the capital raise here, but of course there are fundraise options as well.
Yeah, so your return on equity here is very good at 70%. And that's where this starts to get really exciting because
Well, yeah, we have a lot of people in, let's say, the townhome build sort of specialty. And sure, they're all going to target their 70% return on equity, but they achieve that typically over 3 to 4 years. So being able to take this down to a 2-year project, get the flip out, you improve your annualized return on equity all the way up to around 35% on a project like this.
So who do we help? Who benefits? Who can get involved, right? So investors like yourselves, this is how we can help you. We can help you by acquiring the land. Looking at revenue projections, I cannot tell you how important the revenue side of this is. Your confirmation of the revenue will confirm the project moving forward. Looking at area-specific product. So what are we building for this neighborhood and will it sell? Is there a marketplace for this? And will the buyers actually transact? What's more, from a consulting perspective, we've aligned with builders, architects, engineers, lenders, and Dan and myself, obviously, in the sales side and the feasibility side, we do the project marketing, and we'll also do the sales if you sell them later at completion.
So another element that the multiplex plan has really brought to the forefront is for the existing homeowner. So let's say, for example, you live on the east side, you've got a property free and clear, and it's worth $2 million on the open market. You sell it, that's great. You know, you've got your 2 million on with your life. We partner with a number of groups, and what we can offer homeowners, for example, is we will come in, we'll still buy that property for 2 million. You take $1 million, that's yours, you put it in the bank. You take the other $1 million and you invest it in the project. We will go through the whole process here. We will build out, we will sell it, and the homeowner gets to benefit from the potential upside of the sale of the final product. That typically sees an increase in your exit strategy of maybe another 20%. So instead of grossing 2, you get 2.4, right? You've got one chance to sell that property. And if we can give you an extra 20% lift on it, then we are definitely seeing some absorption within that opportunity.
So that really covers the back of the napkin pro forma here. If you guys are really interested and you want to learn more, maybe you've got your own property and you're thinking about how do I benefit from this? We are working with a number of different groups, and we'd love to entertain that with you. If you go to thevancouverlife.com, you can find our emails, our contacts, and everything there.
As Taylor mentioned, we are very active on YouTube. Every single week we release videos, and a lot of these videos, especially of late, are with interviews with people like developers, with architects, with people that are involved in multiplex. And you can watch all those here.
Yeah, that's it.